So this question is from somebody who's 28 years old and female. So she says, I am 28 year old female, married and currently living in Bangalore. I draw 1.2 lakh in hand salary every month. My monthly expenses and investments are as below. Home rent plus groceries 15k, personal expenses 6k, MFs and share bonds are 10k each. So basically 21,000 of expenses and 20,000 in investments. All right. I have around 12 lakhs in my savings account. I'm assuming that is in form of FD. Um, in case it is not FD, it is generally advisable to have a FD, because FD can also be redeemed with just 1% penalty, just like savings account. In that case also it will be giving more return than the savings account. All right. 30k plus 20k a month runs as RD. This I have kept it as emergency fund. Okay, so 6 lakh of emergency fund plus down payment amount for housing is 6 lakh. Okay, so in future you want to buy a house, for that particular reason you have kept this 6 lakh amount. That is all right. But I think the emergency fund of 6 lakh is a bit high, considering your expenses actually are just 20,000. Yeah, I mean, so okay, let's read it further. We are planning to build a house in native place, she means to say, which will be costing around 60 lakh, and we are planning to take a house loan for 40 lakh. All right, and my share of EMI would be around 20k a month. Okay, so you will be splitting the EMIs and you will be paying basically 20k. So on the expenses side, 20k is already there of groceries and personal expenses and home rent, and then these 20k extra will be coming up, so that is total 40k thousand. Okay. I have around 6 lakh in shares already. All right, great. I feel I can still invest around 40k per month. Okay, so 40k is already in expenses, 20k you are already investing. That leaves us with 60,000, but you say you can invest around 40k per month. So what is the plan for the next 20,000? Let's figure out. Which is currently accumulating in saving account with minimum interest. I'm not a risk taker. Okay, point taken. Not a risk taker, and I have the responsibility of sharing my brother's college expenses with my dad. All right, all right. So I give them lump sum money of 1 lakh yearly starting this year. Okay, so this 1 lakh will be around 8,000 per month. All right. So let's round it off and say 10,000 is going here. We still have 10 more thousand to figure out, but that's all right. All right. So okay, please suggest me how can I build my portfolio for 1 crore valuation over next 5 to 6 years. All right. As I plan to go back to native after 5 to 6 years to take care of my in-laws and parents. Also, we'll be planning for kids in another 2 years. So I want to be independent even after I'm back to my hometown. I'm not entirely sure if I'll get a work from home job for my profile and experience when I move back. So I want to have my own portfolio which can give me some dividend to spend on things which I love. All right. Okay. Okay. That's a lot of information. Um. All right. So first thing to consider is that you're not a risk taker. That this is clearly mentioned. Let's figure out the maths. Okay. So as I can calculate, your monthly expenses are around 21,000, and also adding this 20,000 EMI into it, which might start in next year or so, but we are calculating from here on already. Okay, so that is 40,000, and 10,000 you are going to pay for your brother's expenses, and let's keep 10,000 of buffer for other things. So overall, other than the 20,000 you're already investing in MFs and bonds, 40,000 you can invest more. So let's for a moment assume that the 20,000 you are already investing in MFs or bonds. Let's just stop that for a moment. It's up to you if you want to stop or not. But if I were you, let's say that you can potentially invest 60,000 per month. All right, and 6 lakh of funds you already have, and from this you want to reach to say 1 crore valuation in next 6 years. All right, so what are the options? Since you're not a risk taker, so it's best that you don't deal into, you don't do such actions like dealing with stocks, or going to crypto, or doing blah blah blah, taking risks, right? So I think for that particular reason, and since your target is also ambitious, that you want to reach certain portfolio in next 6 years, 5 to 6 years. So for that particular reason, I think the best instrument would be mutual funds, our everybody's favorite mutual funds. And you have the potential to take you have the potential to have like 60,000 per month of SIP, right? And since because of your risk profile, I think any mutual fund with a flexi cap sort of mutual fund, let's not like, when you are trying to invest in mutual funds, I would say don't go for any sectoral theme invest mutual fund like infra or any new NFO sort of thing. Rather than that, just go with a large cap mutual fund or a flexi cap mutual fund. There are many. For example, I can give you two names, but no recommendation there, like flexi cap mutual fund of SDFC, SBI. There is Parag Parikh. All these sort of thing you can discuss with your financial advisor, or you can consult yourself. Don't just go with past 1 2 years of performance, and don't go for anything which is too risky, right? So large cap or flexi cap is great. Now let's come to numbers. So for numbers, let's go to Google Sheet, and let's try to see what sort of numbers are possible. Okay, all right. So let me open a sheet, and what we have is, uh, I'm assuming that this 40k plus 20k, right? 60k per month of investment you can do. So for that particular reason, um, let's say, so 60, we start with 60. Let me write uh, SIP here, and um, portfolio value. Okay, so we'll start with 60,000, and since we are going into mutual funds, we are going into equities, let's assume a annual return of 12%. And just for calculation, I'm considering 1% of return every month. If we compound it for an entire year, it will turn out to be somewhere around 13%. So that is the sort of expectation we have, 12.5 to 13% sort of that. So what will be the value? The value will be uh, equal to what? Equal to multiply, yes, let's multiply with this number 60,000 into, I'm doing 1.01. All right. Okay, something is wrong here. 0.01. Yeah, so this is the return after each month, and in this of the current value plus 60 more thousand. All right, yes, so this is the amount which we get. And let me just uh, add it here. Okay, and let me just extend it. Let's just extend it. Conservative approach, let's, right, this is after 72 months or 6 years. And similarly for this. So yeah, so here are the numbers. Basically this is the calculation where we are assuming 12 to 13% of return every year in mutual funds, and you are going to add 60,000 rupees per month. And with that, in 6 years you can reach around 63 lakhs. That is the number which is coming up here. And in addition to this, so this is 63 lakhs. In addition to this, you already have 6 lakh in shares. So let's calculate for that also, right? uh, you already have how much, 6 lakh. Um and for similarly for this one, what we are going to do, 6 lakh, um, and multiply it, we'll multiply it by multiply this number with 1.01. Okay, yeah, so this is the number after 1 month, and we have to do this for uh, we have to do this for 6 years. Apply this, comma, 1.01 month, and let me extend this also to 73, right? Okay, so this amount can become 12.2 lakhs, and if we add both of these together, the final amount will be is equal to sum of this comma this, will turn out to be 74.5 lakhs. So with this sort of calculation of emergency fund you already have, I think, considering that your monthly expenses are around 30 to 40,000, and it is generally advisable that whatever our monthly expenses are, we can multiply it by 6 and keep that amount as emergency fund. Um so for that particular reason, maybe you don't need to increase the emergency fund more. And if you can afford, if you are comfortable with it, because these are just thumb rules, right? It depends upon how much comfortable you are, and like what is the number which keeps you happy. If you're worried about it, then all these numbers are not right. So right, and all of this is just my opinion. I'm just assuming that if I were in your situation, I would do this. I'm just sharing my thoughts out loud. I'm not a financial advisor, and this is not an advice for sure. It's just that I want to like speak on this particular question, right? Um okay, so maybe this particular amount can also reduce, or maybe it can go to equity. And no, if no, then still okay, still okay, you can have it, but you don't really need to increase it, because whatever the cash flow, whatever the salary you are getting, that is pretty flexible. If you don't get into more loans, then this is sorted. So this amount will also in 5 to 6 year increase to 10 lakhs, right? So we are definitely reaching 85 lakhs. Okay, we are reaching 85 lakhs, but we are short of 10 to 15 lakhs. But I mean, look at the plus side. We have 5 to 6 lakh years of horizon. uh, Maybe we'll wait another year, right? But I guess, I mean, I don't think 1 crore is something which you have to be fixated at it, right? Even if it is 85 or 90 lakhs, it's as good as it can be, right? And another thing, you have to be always like wait looking for opportunities. If you find some good opportunity, or even in your job, let's say in 1 or 2 years, if you get a good hike, and say your salary doubles, or like even if it increases by 50% or 40%, then the investments can be increased a bit further. And that amount is, I see, it is really possible. Already with this calculation, we are reaching an 85 lakh sort of amount. And I mean, so I mean, you are on track. Just what we need to what I would be careful about is not taking too much of a risk. So which you already are not going to take, because you're not a risk taker. and also not be too conservative that most of the amount is sitting in savings account or FD. So that is one thing. uh, I don't know what kind of shares or bonds you have, but I mean, um if you want to take a little bit of risk there, it is quite possible because of our age, like your age, which is 28. At this age, we can deal with equity, and this is just a guideline, right? If the stock market doesn't do that well, that this 85 number lakh could also be around 60 lakh or 70 lakh, something like that. And similarly, I mean, if it does well and if you're lucky, it can also go shoot up to 1 crore. So I mean, but this is the sort of approach you have to take, and what is most important is the intention. The number, and like, even if it is 5 years, 6 years, or 7 years, or whatever the amount is, that is not important. What is important, what happens is, we sort of lose our track, and say you got a big corpus, then our expenses come up. Like, for example, yeah, another thing to note is you're planning to have kids in 2 years. So in that case, the expenses might shoot, or you might think to, let's buy a car, or I don't know, let's get into EMIs or something like that. So that can uh, derail the plan. But otherwise, I mean, it is possible with this sort of salary and with this sort of um conservative approach. Or I mean, on the expenses side, I mean, you're not your expenditure is not very high. So for that particular reason, I think this is really possible. This is my take. And let's hope you get there in 5 to 6 years. So I mean, that's it for this particular question. Let me move to the next question for now. So just give me a minute. uh, yeah, I'll just take a minute. Mm. Okay, okay. So I'm back. And with that, let's go to our next question. So next question, let's move to the channel, and let's see what is new here, right? What is new here? Uh, hmm, quite interesting questions here, but hmm, okay, let's take this one. All right. So this is need investment advice for fixed income. Hi, I am 24-year-old and I need advice. I was diagnosed with mental health issue, bipolar disorder, and lost my online business and can't work 9 to 5 job anymore. I have saved up to 33 lakhs so far from my business. I've already invested 7 lakhs in direct stocks. In direct stocks, And recently last week invested 20 lakhs in Nifty 50 index fund. Okay, okay. Uh, I have 5 lakhs in savings account for emergency. Now I'm expecting 12% returns from stock market and looking to withdraw 6% annually. Keep 6% reinvested for inflation. All right. So I would get 14k rupees per month as fixed income. Will this method work in long term? Currently, I live with my parents, so I want to contribute for the household expenses a little. Okay, okay. So, I mean, at 24-year age, you are definitely looking to retire. You're looking to retire already at 30, with 33 lakh of fund. I see a lot of problem in this. Firstly, so what is your plan? Your plan is that you'll keep 6%, you'll withdraw 6% annually, and 6% will be there for inflation. But the truth is, inflation is not 6%. I mean, the numbers that come from the government, the CPI inflation or WPI inflation might be 6%, but that is not real inflation. So that is the biggest reason that this plan will fail. And also these 12% returns are not guaranteed. So let's say for 5 years, the markets don't perform well, your entire plan goes to a toss. And the other thing is, what about your expenses? You will be getting this 40k 14k per month, but is it really enough? I mean, it is not at all possible. um, and for now, like for your daily needs, it might be enough. But look at your life in long term. For example, you might have some plans in the future. If you're going to get married, or you want to buy a car, buy a home at some time. So I mean, I don't see how you can think about this. This is definitely not going to work. And I mean, what you need to do is basically, it's all right if you don't want to do a job, but you have to start doing some sort of business. There has to be some cash flow which um, increases the portfolio, rather than you just withdrawing this amount, and it will basically eventually deplete in few years. So I don't know how this can work. If this is for short term, for like 1 year or something, maybe this is possible. But in the long term, it cannot work. It cannot work. And I mean, I'm so sorry for the issue you are handling as of now. But still, you need to um, you need to figure out some way of earning money. Otherwise, this is definitely not at all possible. No way. Because what happens is, our lifestyle inflation is not exactly 6%. Every year, like all the things that we do, even food, or going out, eating up, like planning for trips, or like vacation, anything you want to buy, all of that increases a lot more than 6%. I would say around 10%. And along with that, you also want to increase your lifestyle, right? 14k per month is nothing if you want to live your life on that. So I mean, I hope you are able to figure out some new business. Maybe try tuitions, or like whatever you can do. So you have to get a job, or get some work. And I mean, I would never, if you have this, I would suggest that this 33 lakhs you have accumulated, don't touch it. I mean, it shouldn't be touched. It should go towards your retirement goal, and you have to, um, figure out a way to to pay your monthly expenses. So I mean, this is a trap, guys. This is a trap. uh, 33 lakhs, or even if it is 50 lakhs, or even if it is 1 crore at this age, and this sort of uh, amount, this is definitely not a retirement amount. So yeah, let's move to next question. um, Good books to start personal finance journey. I mean, there are many books. One is Morgan Housel, which is really good. um, there is there is Dave Ramsey's book, which is also really good. The one you mentioned, Richest Man in Babylon, that is also good. So I mean, yeah. Hmm. Any other question? Okay, let's have a look at this one. Need advice on how much to invest and where to invest. Okay. My wife and I are looking for advice on how to invest 1.5 lakhs that we have saved. Here's a quick overview of our financial situation. Monthly expenses. Okay. Nice breakdown there. 84K total, which is rent, groceries, utilities, transport, dining out. So with this sort of detail, every like all I can see is that you have a budget. So, and you know what your expenses are and what your income is. So I mean, that is the first thing. Mostly what happens is people don't even know how much expenses they are incurring. Okay. So additional details, we are in our early 30s, both salaried professionals, no kids yet, but we are planning for one in next 1 to 2 years. We have an emergency fund covering 6 months of expenses. Both of us have EPF contributions, health insurance. All right, all right. Build wealth over long term and retire by 40 45. Fire, fire on the go. Potentially save for house down payment in the next 5 years. Okay, okay. Have some liquidity for short term needs. We are not sure where to start. Should we consider SIPs, direct equity, debt instruments, or something else? How do we balance long term growth and short term liquidity? How do we balance long term growth and short term liquidity? All right. Hmm. How to invest 1.5 lakh that we have saved? Okay. Any specific stocks instrument you recommend? My guy at the bank asked me to invest in ULIPs, regular mutual funds, and not direct mutual funds because they give better returns, is what he said. Well, this is really funny. He says regular mutual funds will give better return than direct mutual fund. This is really funny because regular mutual fund versus direct mutual fund, you are getting basically the same mutual fund. The only difference is in regular mutual fund, your bank guy will be getting a share of your money. So, like, you can pick one mutual fund. For example, let's say you have picked some large cap mutual fund. In the regular one, the expense ratio would be a bit more, and direct, it would be less. Everything else will remain the same. So, how can regular mutual funds give better returns? But yeah, it can give better returns, but not to you, to your bank guy. And ULIPs, let's not just talk about it. This is a trap. No one should definitely. I mean, it is an avoid. So um, it is up to you. You have to do a little bit of more research and figure out that regular mutual funds and ULIPs will not give you better returns. Don't trust me, don't trust your bank guy. Just do your own research and you will realize that direct mutual funds is better among the three options. All right, please advise if I have to invest the entire amount, how I go about and what I need to do. So you have not discussed here about how much you're saving monthly. At first look, I thought this 1.5 lakh is your monthly savings, but it looks like that is the total amount you have to invest. And if this is the amount, I don't think it has to be invested anywhere. It's fine, just build a emergency fund out of it, just keep it in FD or in savings account. um, the expenses are fine, but where is the income? So uh, I don't know. uh, let me just type here, what is your income and how much can you save monthly? 5 lakh amount needs to be there as your emergency fund. Count as FD. We need a clarification on this. So I don't know. I mean, he mentioned a lot of expenses, 84,000, but there is no mention of income. Uh, Maybe is this 1.5 lakh monthly savings they are doing, or I'm not sure. The question is um, not real. So let's move to the next question. Um, okay, let's see if something else is there. How to start investment if I can only invest like 500 rupees per month? I'm 18, still a student. You don't need to invest this. You're 18, you're a student. You don't have to invest 500 rupees per month. Just keep it as pocket money, spend it on books, do like education. And I mean, why do you even have to invest this particular amount? So you don't just spend on your growth, right? Your learnings, get a good degree and that sort of a thing, get good education, spend on yourself, have a great experience, and then start your career when you have finished college, or like starting some job or some business. This 500 rupees is not going to matter much, and you will be wasting your time on this. So all those who are still studying, or not really making any money, they don't really have to do all of these investments. So yeah, I mean, that's all you need to do. And anybody who is 18, 19, 20 and not earning much, they don't have to invest 500 or 1000 rupees per month. It's not necessary. Let's have a look at this. Advice for investment: lump sum 1.7 crore and salary of 8 lakhs per month. Okay, that is a big amount. Seeking advice for lump sum and recurring investment. I have a lump sum amount of 1.7 crore by selling a property. Monthly in hand salary is 8 lakhs in a stable job. What? Monthly in hand salary is 8 lakhs in a stable job. Location: Tier 1 city, India, 36, male, married, and have a 3-year-old son. Monthly spends 1 lakh, no EMIs. Oh man. Well, just for the sheer amount you have, you should consider a financial advisor. That is the best way. When it comes to amount which comes from property, generally what happens is there are tax situations, and it is best to reinvest that amount in some property. But if you have decided to go in equities, then I mean, equities can all is also doable. And in that case, what one can do is either can do lump sum if you are comfortable into mutual funds, 2 3 uh, large cap or flexi cap mutual funds, or another way to do this is 50% lump sum and the rest of 50% um, in SIP over 6 months or 12 months as per your convenience. And then, I mean, 7 lakhs is the savings you are having per month. So, I mean, that can definitely straight away go to equity mutual funds. This is sort of amount where, you don't really need to worry about your, uh, I don't think it really matters, like liquidity and all. So you can just keep 1 month of salary as your emergency fund, um, in a FD or so. Or if you decide to have some allocation, let's say 10-20%, so 10 lakh or 20 lakh, whatever you're comfortable with, that sort of amount can sit in FDs, and the rest can just go into mutual funds set regularly. And uh, I guess soon you'll be a millionaire with that sort of amount. But definitely, I mean, we are speaking in crores here. So I mean, it's best to consult a financial advisor, pay a little bit of money, and figure out the details and nitty gritty of the situation. uh, there's, I mean, a lot. It's more about the sort of personality you have, the risk appetite you have. uh, so those sort of things need to be figured out to figure out, what kind of investment you should make. Maybe if you're a conservative person, you should only go into FDs or gold and like property. But if you are fine with taking risk, then somebody can go into equities, maybe cryptocurrencies. uh, so there are various sort of assets, and how much time you are going to willing to um, willing to spend on your investments, and what are your future plans. All those sort of things comes into the picture. So unless a financial advisor will get to know you and then listen to everything what you have to say, and with that only somebody can suggest, right? So I mean, there's no point uh, looking for this sort of advice in public forum. That's all I have to say for this particular reason. Best Bitcoin app for Bitcoiners. Come on. Where's the best place to park taxes? Huh? My. Hmm. I guess nothing is coming up here. Um, okay, let's have a look at this one. A post about my income. I'm 28-year old male, a graduated guy earning 25,000 per month, spending as below. Household expenses 11,000, traveling expenses 1,500, light bill 1,000, range water, no rent as it is owned by father, living in Chawl, small house. Sometimes I eat outside, not more than 50 to 100 rupees. All right. I have one endowment LIC policy costing 6,800 quarterly. The policy has completed 5 years and 5 more to go. Okay, so you are already stuck in this LIC policy. I mean, all you can do at this stage is just keep adding it into it. But there is a problem with policies and all. The problem is that you have to continue it till 10 years. There is no flexibility that uh, this amount is sitting and I can redeem it at any time, even with some penalty or what. So like for example, if there are FDs or bonds or mutual funds, equities, even if the FD is for 5 years and you need that money in 2 years, you can instantly redeem with 1% of penalty. But at least you have that money. Say, similar with bonds, similar with equity, similar with gold or anything else. But this sort of policies where you are just stuck at it and that this money is not there really, it will only be available after 10 years, and after 10 years you realize that the returns were also not that good. So I mean, this is the particular reason for which policies, ULIPs, and all of these sort of fixed schemes one should not go into. But since you're already there, what can we do? So just keep adding to it. Okay, okay. So expenses are around 11-12,000 and you're earning 25,000. Please give suggestions to increase my salary and also give suggestions about the personal finance. Okay. All right, all right. So I am assuming that oh, you have already mentioned you are a graduated person. So yes, definitely. You are. Your question is already answering half of the answer. The focus is right. What you really need to do is increase your salary, and that is the tricky part, right? That is the hard part. Once the salary comes in, once the money comes in, after that saving and managing the finances, I mean, and some people can do it, some people need little bit of advice, but first thing is one has to get the income, right? So what can we do? Oh, I don't know what job you are doing currently, but um, I think all I can suggest about increasing salaries, maybe uh, look for some diversification of your salary. Look for some other business. Look for some other gigs. Something else you can do other than your regular job. At the same time, also looking for better jobs in the same field or anywhere else. But you can start some ventures um, like tuitions, or I don't know, online blogging, or doing something. I mean, like in tier 1 cities, one can even do deliveries, cab, or um, just selling food in the stalls or everything, right? So I mean, you have to look for some other source of income. And I would not go in the direction of setting up a business where you require a lot of capital. So don't go into some business where you need a lot of money upfront and then you will be able to make money out of it, because that is really risky. And I mean, most of the times people get stuck in such sort of things. Don't take risks in that regard, but learn a few things, get some niche, get income, talk to people maybe around your job, and just do some job, l- driving or anything in particular you like. Just start doing that, and you have to focus on that, and that is your focus actually. But I mean, um, I would have really liked if I could speak to you personally and give you some suggestions depending upon what job you already have. But I mean, the best thing is that you know where the problem is, and that once the intention is there, people are generally able to figure it out. So that is one thing. And about the personal finance, I mean, don't fall into policies and all these sort of things. It is better to invest in FD stocks or mutual funds, those sort of things, where at least the money is in front of you. You can redeem it in 1 day, 2 day, or like instantly. So that is one thing. On the personal finance part, I am really let's just look at comments on what others are saying about increasing the income. Yeah, yeah. So this is an idea that you are good at English. You can develop some computer skills, editing documents, pictures. Yeah, I mean, those sort of work. I mean, if you have some skills and you find a job, you will be able to do. Uh, Become real estate agent and all of that. So yeah, you have to look for opportunities, and opportunities come in weird ways once you start looking at it. And most important thing is, do you have time for this? uh, Yeah, another point, that you should increase your active income instead of hustling. That is also an approach. If you can find a way to, just get more income from the job you already have, like some looking for promotion or changing job in the same field, that is also way. So I mean, in this, there is no absolute truth, right? It is very subjective, and it is up to you. Conduct English classes. Yeah, I was teaching maths to 11 12 science students in my home before I got this decent job. So you can still do some sort of teaching, right? Right now, I mean, online teaching is a thing. And even at night, or just do 1 2 shifts or something like that, I mean, teaching, it can give you money. So that sort of thing you have to do. um, get switches. Yeah, I mean, yeah, I mean, there are a lot of things. If one is intentional, they can, try and get your salary increased. And I mean, best thing is that your expenses are minimum. So even with this salary, you might be saving something, right? So if the salary increases, your savings will increase exponentially, right? So in that case, with little bit of grind, you can have a really wonderful life. And in some time, this situation can change drastically. So yeah, kudos to the person here. And with that, I think my stream is going to coming to an end. So everyone, in case if you're watching, thanks for watching. And if you have any personal finance related questions, or any questions related to investments or stocks, anything other than that, anything at all, if you have anything to say, please write down in the comment section and let me know. I'll try to entertain you. So once again, thanks for watching.